Welcome back. Now, Eskom's revised unbundling plan has sparked debate among investors and market analysts. While the plan aims to split Eskom into separate entities, Futuregrowth Asset Management, one of the country's leading bond investors, warns that unbundling alone won't resolve the utility's massive debt challenges and has highlighted concerns about governance and the independence of key subsidiaries like the transmission company. The company's head of credit, Olga Constantinatos, joins us now for greater perspective. Olga, thank you so much for your time today. Now, the point of contention here, right, is around the revised plan, the revised unbundling plan that now sees that Eskom will still have ownership on the unbundled entities, right?
Yes, that's right. I think what we need to be clear about is the purpose of the unbundling is really to liberalize our energy sector and to introduce competition into what has historically been a monopoly position that Eskom has operated. And so unbundling is a necessary step in this reform process. One of the side products of the reform process is also to invite institutional and private sector investment in our electricity sector. And that link then takes us to Eskom's balance sheet and its historically unsustainable capital structure. What that's meant is that Eskom has been unable to make the investments that are needed in our energy sector.
Yes.
And we've seen that initially with generation, that's, making of the power and the private sector involvement in that has led to a very successful renewable energy independent power producers program, which saw over 200 billion rands worth of investment in renewable energy generation. That led to 6,000 megawatts of additional capacity. That was all done without Eskom burdening its balance sheet. The focus now in this step of the unbundling is to the transmission of that electricity, really the lines and the poles that take the energy from the generation place, whether that's a wind farm or a nuclear farm, to a distribution point. And there's a very heavy investment that's needed in that transmission infrastructure. And Eskom's unsustainable capital structure means that it itself is unable to make those investments. Transnet's transmission development plan, published in 2024, estimates that 390 billion rands worth of investment is needed in transmission over the next 10 years. And what the implication for Eskom, because of its unsustainable capital structure, is that it is unable to make these investments itself. And so reforming the sector invites private sector capital, which is available and willing to invest in much needed infrastructure in our country, into these projects. And so that, I think we mustn't lose sight of what the rationale for unbundling is. It's not Eskom specific, it's energy sector specific. And it really is to liberalize our energy sector and introduce a competitive market for energy in South Africa.
And then what are you saying then to, I guess, Minister Ramokgopa's reasoning behind this revised plan, right? We are talking about liberalizing the electricity market, getting more players in there, making it a bit more competitive. But here we are dealing with a bit of a setback, right? The minister saying that actually holding these transmission assets under Eskom will help alleviate the balance sheet. But I then can imagine on the other side, with those assets under Eskom, I guess the transmission operator can then not raise its own capital to expand the grid.
That's exactly right. And so the reform process and the minister and the government must be lauded for the steps that they have taken to liberalize and reform the energy sector thus far. We've seen it in a myriad of points. I think this latest development is a slight setback in that it just raises some questions around how this transmission operator is going to be able to, exactly the point you made in Tauleng, how they are going to be able to raise the 390 billion that's needed in capital, which Eskom doesn't have. The transmission company, how's it going to raise it when it doesn't have any assets potentially to borrow against? It's just not clear how this next step is going to be is going to be followed when this change has been proposed. I think as well it's important to note that this change deviates from the Electricity Regulation Amendment Act, which sees the transmission operator, the transmission company, as being wholly independent. And so it's not clear to us, necessarily why this step is needed if the overall purpose is to liberalize and introduce competition into the overall sector. The purpose shouldn't be to shore up one entity's finances within that broader ecosystem. The purpose is very clear, actually, in the Amendment Act, and that is to liberalize our energy sector into a competitive market and to introduce an independent, it's a very important word, independent systems operator that can buy electricity from anybody, the cheapest, hopefully, a generation producer, and keeping it within the Eskom stable introduces a possible conflict of interest because it'll have sister subsidiaries that will be generating electricity, and there may be some pressure. One never knows. These conflicts would have to be cleared and managed. It just creates a little bit of muddiness in the system that we think is potentially unnecessary.
It seems to be like there is a lack of transparency with that model if it would be used. Interesting that you mentioned the Electricity Regulation Act. Minister Ramokgopa also saying that the revised plan is in line with it. But from what I'm hearing you say, it's not. What's the confusion about there? We also heard from Treasury appointing legal experts to also relook whether this revised plan is in line with the Act.
Yeah. So the Act basically requires the establishment of an independent, that word again, transmission system operator that can facilitate competitive electricity markets and ensure non-discriminatory, i.e. not favoring, non-discriminatory network access. And so that's in line with the Act. Our understanding, and again, this part isn't necessarily clear, is that this step is a transitory step, that there is a 5-year plan potentially to transfer the transmission assets and for it to be wholly independent in 5 years. But again, there's not really a lot of clarity around what those steps will entail. Is that a hard deadline? And how will that independent transmission operator that is, as we understand it, a requirement of the Act, how that will actually be executed on?
All right, let's leave it there. Olga, thank you so much for your time. Really something we need to continuously talk about because it does, of course, ensure that the electricity market is reformed within the country and it is operating independently and encourages private sector participation. Olga, thank you again for your time. Now, that was Olga Constantinatos, head of credit at Futuregrowth Asset Management.